Hey Rebels, welcome back to the channel. So we just saw a signal flash that we haven't seen in the last 4 years, and it typically is what starts off the altcoin season. So it's something that we've been hearing about a lot. Everybody's waiting for this altcoin season, and there's a signal that just triggered that usually fires off the altcoin season. So I'm going to walk through that. I'm going to walk through the typical weekly analysis, as well as at the end, I'm going to walk through 3 or more trades that I've personally entered into the market right now. So if that sounds good, like and subscribe, and we're just going to dive right in quickly. So what I have in front of me is a chart of Ethereum. And what I want to do is I want to compare Ethereum to Bitcoin dominance just to see if we can get some hints on how the two are related. So what I've done here is this is on TradingView. I click the plus button right here. I've already looked it up, but you can look up Bitcoin dominance, which is BTC.D. Click that. That adds it to the chart. What I'll also do is click on the scale over here, click that back to regular so we have it in dollar terms so we're not getting confused. I'll drop down this menu, and what I'm going to do here is move this to a new pane below. And what that's going to do is that's going to allow us to navigate both of these charts at the same time. And I can move the scale here, make this as large or small as I would like to. And I'm just going to dive into the signal that we just saw flash this cycle. But we're going to go back in time to the previous cycles just to see what happens. What happens to Bitcoin dominance when Ethereum breaches its previous highs? Okay, so what we have here is the 2017 bull market. Ethereum breaches its previous highs, and we have Bitcoin dominance basically falling off a cliff. So Bitcoin is yielding to the other altcoins, effectively giving dominance or liquidity to the altcoins. So that right there is an altcoin season. And we'll fast forward to the 2021 bull market. We have the 2017 high here. Once Ethereum breaches that and gets into price discovery for the new cycle, we have Bitcoin dominance falling off aggressively. So what do we have here? We just printed Ethereum all-time high price, just now breaching the previous cycle highs, as well as seeing weakness in Bitcoin dominance. So why don't we just dive into Bitcoin dominance and do a little bit more review. I'm going to go over another signal that we typically see during macro trend changes. And if you're unfamiliar with that, I'm just going to go very briefly on that. And it's called overbalance in time and price. And so what I do is I will draw a trend line right here because this was the deepest correction that we've seen in Bitcoin dominance so far. So if anything, any movement like this is basically just a measured move. We've seen it before. It doesn't necessarily indicate a reversal. The other thing that you're going to go and do is you're going to check out different time scales. What's the longest that Bitcoin dominance has fallen to the downside? And I believe that's this right here. So now I have a line right here that gives me the farthest that price has been pushed down in Bitcoin dominance and the longest that it has. So once we have breached both of those conditions, we have an overbalance in time and price, suggesting that the macro trends are actually changing. And there's a lot of confluence between this overbalance in time and price and this ascending channel that we've seen this entire cycle. So we're starting to really get an aggressive breakdown in Bitcoin dominance, similar to previous cycles where we're just breaking down more aggressively. Okay, so those are a couple signals that are flashing right now while the market is afraid, while there is very little interest in the market. You can see that by looking at the Google trends. And effectively what you want to be doing is getting interested in the markets when nobody's around. You don't want to be getting interested when everybody is interested. Let's see the most interest that we had in this last run up here, November of last year. You just look at November of last year. Let's see. Oh, can't see it. Let's see. November of last year. Sorry, guys. Basically right in here. Not the best time to be interested because we already have that run up. So that's basically it. This is when everybody's interested, and when everybody's interested and everybody's paying attention, everybody's bought. There's no more buyers in the market. It happens time and time again. Interest is the highest basically around the peaks, and that's when there's no more buyers because everybody's already in the market. And the same inversely, basically when prices have come down quite a bit and there's no interest and the volume has died off and the volatility has died off, that is the time that you want to be a little bit more interested. Okay. What we're seeing down in the exchange volume, basically we did finally break this macro downtrend that we've been talking about. We're not expecting sustainable higher prices in altcoins or any of the crypto market until we get an expansion or higher volume, higher prices with the higher volume. So right now we are starting to see higher lows form on the volume, which is good, but we're kind of starting to see a contraction, which also makes sense because we've talked about this several times on the channel too, where we're coming into this kind of seasonal date. I have this overlay right here, which is basically a compilation of a couple different cycles of Bitcoin price history, and what shape is it most likely following. Okay, so this is basically the 5-year cycle and the 10-year cycle. I've talked about this also a bunch on the channel. But what we're seeing is this potential drawdown here into the September, October timeframe before a very aggressive expansion into the end of the year. And that's kind of the thesis right now. So a lot of different things are playing ball. We're starting to see the Google Trends die off. The interest is waning. The volume is slightly contracting. We're not seeing aggressive expansion yet. However, we are seeing that Bitcoin dominance signal flashing where we have that overbalance in time and price, and we are breaking that long-term ascending channel. Okay, so there's a saying in the market that the train leaves empty. So effectively, when there's no interest in the market, is probably the better time to be getting interested in the market. So right now, honestly, really good opportunities out there. Very good time to start being interested in the markets because we're not at these overextended high levels where you're starting to see excessive greed and everyone is convinced that we're going on for higher prices. We're actually starting to see disbelief in the market, which is a little bit better, more favorable entry as far as being a long only investor. So let's see what else we have here. That was kind of a brief I think the last thing we got to do here is just pop over to Bitcoin and see what is the weekly analysis telling us. So we have this trend line talked about many times on the channel from the 2017 high to the 2021 high. And how is it respecting that line? Well, we're kind of just chopping around. We haven't definitively really had aggressive trends above this trend line. I mean, if we do get a final blow off top expansion phase, we may experience some aggressive blow off top from these areas, but right now we're kind of just struggling really to beat this resistance line. Okay, so we're starting to see some signs of slowdown in Bitcoin while the Ethereum Bitcoin chart is actually looking really favorable. I'll dive into that in a second. The other thing that I have here is a speed line that I talk about every week. Basically draw a line from the low to the high of the previous move, projected off of the low of the current move. We can see that we started off very aggressively, but we are starting to show signs of weakness, that we're just starting to roll over. This move is slowing down compared to this previous move right here. But we are going sideways in Bitcoin whilst Ethereum Bitcoin is going up aggressively. So the charts are telling us right now that we are seeing an aggressive expansion in Ethereum versus Bitcoin. Now, yes, we are entering some key resistance and support. If I just draw a quick little line across here, we are entering this zone here. So this doesn't go up only, and this doesn't go up only forever, but while Bitcoin is going sideways, Ethereum is coming up aggressively versus Bitcoin, which is another really good sign that we want to see as far as when we're looking for that capital rotation to go farther and farther down the risk curve. So I think I'm just going to go briefly into a couple trades that I have entered, and I'm not going to claim that these are like the best entries, but I know that there's going to be well, I don't know this, but the analysis saying is that there is a potential for a slowdown or a correction into the next couple months with an aggressive expansion to the upside. So what I like to do is I kind of like to slowly enter positions because we don't know that is actually going to play out that way. Nobody actually knows what's really going to happen. So analysis is one thing and trading is another. So if I see something where I see favorable risk to reward, then that's what I'm going to be most interested in. So one that I have here that I'm starting to enter in is basically large caps is what I would like to see, because typically large caps are going to see the liquidity before we go farther and farther down the risk curve. So there's not a lot of point in getting exposure, very heavy exposure to any of those things until we start seeing more and more signs that the capital is rotating. So what I've done is there's many charts that you can go look at, but these are layer ones that I'm interested in. This one is Say. We've seen the TVL on this chain rising pretty aggressively over the last several months, even while the price has not been kind of lackluster, right? So we can kind of see ourselves in this descending wedge pattern looking for a potential break here. Higher probability play is going to be waiting for a break of this trend. So that's one way to play it. The other way to play it is to start entering now and DCA into a position, understanding that you know that your risk to the downside right now is about 60%. That's quite a bit. But if we breach these lows, then we know we're absolutely cooked and we were totally wrong. However, the risk to reward is quite good because you can lose half your money to make a 3.5x, right? And so that's a decent risk to reward. So one thing you can do is wait for a break of this trend line. One thing that I like to do as well is click on that trend line, add an alert. I usually do once only because I don't want to have this thing alerting me all the time. I just want to know one time, and then I change the expiration date and just kind of push it out as far as I can. So that way I know that once the weekly time frame breaches this, we have a higher probability for a continued uptrend. Okay, so let me draw some resistance. There's a pretty clear resistance and support line right here, right? So one thing you might do is you might wait for the price to come up, breach these lows, and come back down for a retest before going higher. Okay, something like that. This might be a good entry. I've actually pretty much entered on support as well, and have my stop losses. I think my stop losses are actually below here, but either way. So one thing that you can do is understanding that there's potential for more downside is you look for other confluence, right? You have this trend line as well as this support and resistance. So what you might do is you might put another buy order. You might do half now in anticipation for potentially the market going up, because we don't know that we're going to get that slowdown. We just saw Bitcoin dominance breaking down aggressively, which means it's quite possible that liquidity could flood into the altcoins sooner than later. But if that doesn't play out and we do have that slowdown, then maybe I'll have a buy order somewhere where there's confluence between this trend line and this support and resistance somewhere in there. And when that order gets hit, maybe my average price is somewhere in between. And now I'm going to wait for the end, basically till the end of the year, to see when that happens. Okay. The other one that I've gotten in is Doge. Not saying that, again, these are the best entries, but what I have done is I've waited for a breach of this downtrend. We got a downtrend, came down for support, and we're also effectively kind of just sitting on the edge here, getting some closes above this particular support and resistance right here. And this pattern I've seen many times. Effectively, it's just you have a downtrend here and the base rounds, and then you get an aggressive expansion once you breach these tops. Same kind of thing here. So for me, right here, Dogecoin to the top, it's usually a first mover. It's 100%. So it's like a nice, relatively safe risk to reward where you can double your money in a short amount of time. You can see that when it does go, it expands pretty rapidly, and it's one of the first movers in the altcoins. So I like to have a little bit of exposure to Doge every now and then, and just let it do its thing. Let it gain that attention and gain that hype. And maybe I'll take out 80% of my trade here, then I'll still be in profit and let the rest ride for the rest of the cycle, something like that. The point of this is that you want to have your own plan. I'm just kind of flying through these really quick, telling you my thoughts on what I think about trades. I'm looking for a good risk to reward. I like to wait for a breach of a weekly downtrend to give me a little bit better chance that the trends have indeed changed, and that we're it's the market is showing us that we're gaining strength because we've effectively ended that weekly downtrend. The other one that I've entered more recently is Sonic. It's another layer one. Effectively, same thing. Draw a trend line, a weekly trend from the highs right here. We've had a breach of that trend, and we have major support and resistance right here that we're closing above. Subtly, higher lows. And when we breach this top right here, we'll have higher highs, higher lows. We'll be in an official weekly uptrend. And again, risk to reward for this one to the downside, roughly 25% to make a 3x, roughly 200%, roughly 3x to the all-time highs. That's good risk reward. Okay. I'm willing to lose 25% to make that 300%. That's effectively what you want to do. So you want to identify your risk ahead of time. How much do I want to put in the trade? How much do I want to lose? That's all going to be based on how much capital that you have initially and how much you want to put up for each trade. So that's risk management. That's definitely for another video. If you've made it this far, please like and subscribe, and ask for any other charts that you would like me to go through. I'd be happy to do that. That's kind of what I like to do. And I think I'm going to leave it at there. Those are just three trades that I've entered. Again, not saying that these are the most phenomenal entries, but right here you can see this one right here is a 12 to 1 risk reward. So every dollar that I'm risking, I'm going to make $12 to $13 on that trade, right? And I believe that it's quite possible for a lot of these to definitely expand into all-time high territories. Basically, we had Bitcoin breaching into new cycle highs. Now we have Ethereum breaking into new cycle highs. Eventually, that liquidity is going to make it farther and farther down the risk curve, because as people join later and later, they're going to be forced down the risk curve. They can't buy Ethereum anymore because it's overextended. It's already had its move, right? So they're going to have to find these things. And the key right here is to basically get positioned early into some stronger altcoins or some layer one altcoins that are seeing some good growth as far as the TVL goes, and positioning yourself early. There's a saying, train leads early. You want to be early to these things. So right now, I think we're in an environment where we want to be diligent, start looking at the charts, continue to look at the charts, because right as the interest is dying off, we're seeing these major signs that we're starting to get strength in the altcoins. One thing that I haven't even looked at myself this week that I will take a look at quickly. Yeah, so this is another way to look at it, just to end this here. So we have very brief moments where altcoins outperform Bitcoin for an extended period of time. This is the total two divided by Bitcoin. This is the altcoins versus Bitcoin effectively. And typically what we have is we have a rapid expansion and then a long bear market of where the altcoins bleed to Bitcoin. And this would be Bitcoin dominance going up, right? This is kind of the inverse of that Bitcoin dominance chart, but it's just another way to look at it. So we have a breach of the downtrend, then we have a five-wave structure to the upside. We have that basically breach of that downtrend and possibly the beginnings of that five-wave structure to the upside. So we are in an uptrend on this chart, basically signaling that we are quite possibly starting that rapid expansion. Okay, so anyway, that sounds good. Like and subscribe, please. Thank you guys for if you made it this far. Please leave a comment, even just anything. Thank you. Anything that really helps me out, helps get the content out there. I know that there's a lot of other channels out there that you could be watching. I just kind of try to take the hype down and just from one person to the other, give my views on the market and how I'm seeing it without all of the crazy news and crazy hype and excitement, because these markets are dangerous and you don't really want to get yourself overexcited. You don't want to dive in because you're fearful of missing out, and you don't want to jump out of the market because you're fearful of the downtrend or the potential correction. Okay, so anyway, hopefully that was helpful, and we'll see you next time. Thanks, guys.